In this lesson, we want to look at another concept that we need to be able to orient ourselves better in the market and also know when we can actually enter a trade and when not. To do this, we will use a concept called order flow. We've already talked about the fact that market participants are constantly active and constantly placing orders in the market. We have also talked about aggressive buyers and sellers. We also talked about passive buyers and sellers too. And ultimately, we have a constant back and forth in the market. And somehow, we have to be able to track this flow of money in the market so that we know when the time has come for us to enter. And there are very powerful tools for this. A candle in trading actually only consists of the footprint, meaning all the sell orders and buy orders in an area. This means that in order to see the order flow, we could simply look at the footprint chart, but this would require the purchase of level 2 software, and reading the footprint chart is not exactly easy. Since this is quite complicated, we will take the simpler method without the need for level 2 software for the footprint. And for this, we simply use structures as before, and we take the 15-minute basis. So we measure the structure on a 15-minute basis and call it order flow. This means that if the 15-minute structure breaks, for example, from short to long, then we say that the order flow changes from bearish to bullish, and we move into bullish scenarios. We then call the structure break order flow shift. The order flow shift is measured on a 15-minute basis by asking ourselves which point has led to which low, and as soon as this point is taken out, we speak of an order flow shift. In the bullish scenario on the left, this will be a downtrend. We come from this high into this low, push into a new high, and thus have an order flow shift. This is the point at which we say, okay, it looks like the market is more bullish again from now on. And we want to take advantage of this bullish intention and get into our trades and then ride this bullish momentum. Of course, this also applies for the short variant. Here, on the right, we are in an uptrend. From this higher low, we push into a higher high, making low, another lower high, and attention. We ask ourselves the question, which point has led to the current highest high or low? This means that we really always look at the point from which the momentum started, because it is important for us to see that the market breaks this momentum. In our example, our order flow shift is not broken at the sub level, but only later on. This means that we always look at an order flow shift from the momentum that led to a higher high, as in example 1, or a lower high, as in example 2. The momentum must then be broken by a break below the low for it to be an order flow shift. And very importantly for you, we only ever want to move with the order flow in the market and not go against it. Now we want to go back into practice and look at how we actually measure an order flow shift and how we move through the market here. And for this, we will of course first go into TradingView. Let's move into the chart. Here we see we have this high. This high led us to our newest low. So from the momentum started from here, so this is our order flow shift anchor point. Normally, we say the point that makes the next low is our new order flow point. However, we could say this is our low, we made this high, and from here we made a new low. But I would not consider this level to be of structural value in this point, because the momentum started from up here, and this is just a retracement from this momentum. So if we move on to the right a bit more, we have this low that didn't lead us to a new high. This low didn't lead us to a new high because this order flow shift is not broken. We have more to the right. Now we see this is our lowest low. From this point, the momentum started and we made a new low. So we delete the previous order flow anchor point, and this is our new one. Since this point and this point never got broken, we are always in a bearish market here, and we only search short trades. Let's move on. We see the market makes a new low here, and we make this low. From this low, we make this high. This is our new order flow point, because the momentum from here starts and we make a new low. We go deeper. We see we make a new low, we push up again. From this point, we make a new low. We see this high leads us to a new low. So we delete the previous points again. Now we move down, and we have an impressive bearish market here. Now let's move to the bottom. This is our low. This is our order flow. We make a new low. Now the question is, you could say, maybe this is an order flow. This could be our next order flow, because from here the big momentum starts. Then this could be our next one, and so on. From here, we see we make a new low. This is our lowest low now. And we did not, in this area here, we did not make a new low. So this is not broken. Meaning, this is our order flow point, which led us to this new low here. We see that this order flow point gets broken from here. The momentum auto started from this point. So this is our order flow shift now that shifted us from bearish market into a bullish market with this break. What we do now? Now we just look at the market further. We see we made a new high. This could potentially be our order flow point for the bearish if we break this. But we make a new low. We see this is our order flow. We make a new low. Then we move down further. We make a lower low. We make a lower low here. So this is our order flow point. But from this point, we broke this order flow. We are in a bullish scenario again. And we just continue this on and on. The market goes up again. We make a new high. We have this level here, which is our order flow. And we move long again. We make a new high. And we have this low. We break this high. We're bullish again. And so on and so forth. So you would be in a bullish market the whole time. From starting from down here. Here again. We saw the order flow shift break. We broke the bearish structure of the market and entered a bullish order flow with this candle closure up here. From this momentum on, we just search for long trades because this level brought us up here. So here the bullish power happened. And until this order flow shift level isn't broken, we only search for long trades now. See you in the next video.